Jerome Powell of the Federal Reserve just made a big announcement that's going to affect you if you're thinking about buying or selling a home in the near future. And in this video, I'm going to break down that announcement and what it means for you in very real, practical numbers if you're thinking about buying or selling a home this year. The ripple effects of this announcement are going to affect the real estate market across the United States, including right here in my home state of Oklahoma. My name is Ben. I'm a lifelong resident of Oklahoma City, and I'm also a real estate advisor, helping buyers and sellers just like you find their next home or their dream home right here in Oklahoma City and the surrounding suburbs. If you've been thinking about buying or selling a home, my team and I would love to help. You can find all of my contact information down in the description below this video. Go ahead and give me a call or send me a text or an email, and let's have a conversation to see if we might be a good fit to work together. And if you're new here, be sure to hit that subscribe button and tap the notification bell. That way you never miss an update on the Oklahoma City real estate market. Now let's talk about what this announcement was and what it means for you. On September 18th, the Federal Reserve announced a 50 basis points or 0.5% cut in the federal funds interest rate. Now, I want to be clear from the outset of this video that the federal funds rate and mortgage interest rates are not one and the same. However, they are very closely linked. The federal funds rate is the interest rate at which banks borrow and lend money to one another, and it directly affects mortgage interest rates because those same banks are the ones who are lending money to you and I to buy and sell a home. So a cut in the federal funds rate almost always means a cut in mortgage interest rates. Just like when the federal funds rate is raised, we see mortgage interest rates rise as well. Now, I was meeting with one of the mortgage lenders I work with just a day or two before this announcement earlier in the week, and they were telling me that most of the experts seemed to think that the Federal Reserve was going to do a 25 basis points cut, or a 0.25%. And that the mortgage interest rates had already priced in a 0.25% drop. However, what we ended up seeing was a 0.5% or 50 basis points drop. So we might expect that interest rates for mortgages will come down even further in the coming weeks and months. Additionally, the Federal Reserve has signaled that they are going to continue cutting interest rates, so we can assume that mortgage interest rates are going to follow closely behind, or perhaps even anticipate those cuts in the coming months. Now, we're going to dive into some very practical numbers so that you can see exactly what these interest rate cuts mean for your purchasing power when you're buying a home, and how they might affect you if you're selling a home as well. But before we do that, let's talk briefly about how we got here. As you probably well remember, there was a global event in 2020 that affected the world, including economies around the world. And as a response to that, the federal government in the United States artificially lowered interest rates in order to stimulate spending to keep the economy running. And during that time, we saw mortgage interest rates get all the way down in the 2 to 3% range. Those are probably once in a lifetime rates, and maybe you're one of the folks who benefited from that. But since that time, we have seen inflation begin to increase. You've probably experienced everything being more expensive for the last couple of years. Groceries are more expensive, entertainment, travel, insurance, literally everything has gotten more expensive. And that is a result of inflation. And so the Federal Reserve's response to bring inflation down has been to increase interest rates. When interest rates are increased, then spending in the economy slows. If you have to pay a higher interest rate on your car or your credit cards or anything that you are borrowing on credit, you're probably going to spend less. So we're going to dive into the data and take a look at some very real numbers and how they might affect you if you're considering buying a home. Let's first take a look at where mortgage interest rates were as recently as October of 2023. That's less than a year ago at the time I'm recording this. And at that time, on October 18th of 2023, mortgage interest rates for a 30-year fixed mortgage were all the way up to 8%. And if we look at where interest rates are today, at the time I'm recording this, the 30-year fixed rate is at 6.15%. And that is a very real gap, a very real difference between 8% and 6.15% in terms of how it's going to affect not only your monthly payment on a mortgage, but also the amount that you pay over the life of the loan. And we're going to break down those numbers in this video. So I want you to remember that we were at 8% in October. Even as recently as April 15th of 2024, we had interest rates as high as 7.44%. So to be sitting at 6.15% is a significant improvement that will absolutely make a difference in the bottom line for you if you're considering buying a home. What I have pulled up on my screen here is a simple mortgage calculation tool, and this will show us what the monthly payment would be for any given scenario that we put in, as well as how much will be paid over the life of the loan for that mortgage. Now, at the time I'm recording this video, the average price for a home in Oklahoma City, where I live, is $293,000. Let's round that up to $300,000 just for the sake of easy math. So we're gonna punch in $300,000 here. Here we go, $300,000. Let's assume we're putting 20% down, which is a pretty standard amount to put down for a typical conventional loan. And we're gonna say it's a 30-year loan term. That's, again, a very common loan term for a mortgage. And let's put the interest rate at 8%, which is where we were in October of 2023. So 8% interest, I'm gonna hit update. So at a $300,000 purchase price, with 20% down, which is $60,000, we would be borrowing in this scenario $240,000 from the lender at 8%. The monthly payment would be $2,025 for that home. Now, over the life of the loan, the total interest paid would be $393,973. The total cost of the loan for that $300,000 home would be $633,973. So we're going to punch those numbers in here so that we don't forget them. So with an 8% mortgage rate, the monthly payment is $2,025, and the total cost of the loan was $633,973. Now let's run that same scenario, the $300,000 home, at what today's interest rate is. So 6.15% is what we're sitting at on the day that I'm recording this video. And I'm going to put that number in, 6.15. I'm going to update my calculator here, and we're still putting 20% down. So the loan amount is still going to be $240,000. However, you can see that the monthly payment has now dropped down to $1,726. And the total that we're gonna pay over the life of this loan is $526,373. So we're going to plug these numbers in at 6.15%. The monthly payment is $1,726. And the total amount that we're paying over the life of this loan is $526,373. Now we can already see a significant savings here for this $300,000 home, moving from 8% down to 6.15%. You can see the difference in the monthly payment here, as well as the total amount paid over the life of the loan. And if we were to just quickly do this math, the difference between the monthly payment for these two interest rates is $299 every single month. Now, I don't know about you, but I can think of a few things I would do with an extra $299 in my bank account every single month. Let's look at the difference in what would be paid over the entire life of the loan. So $633,000, $973 is what would be paid over 30 years, and that's with no extra payments made or anything like that. And if we subtract from that $526,373, which is the total amount paid over the life of the loan at 6.15%, we can see that we have a significant savings there as well of $107,600. And that is a significant savings over 30 years' time, over $100,000, 6 figures saved by a change in the interest rate of less than 2%. Now, because the Federal Reserve has signaled that additional rate cuts are coming, most of the experts are anticipating that we're going to see at least another 0.5%, and that may be split up over the coming months, maybe 25 basis points or 0.25% each in the next 2 months. We could go even further than that, but for the sake of being conservative with our numbers, let's say we're going to see another 0.5% in rate cuts by the beginning of 2025. And let's take a look at what those numbers would look like. So if we were to subtract 0.5% from 6.15, that would put us at 5.65%. So again, looking at this same home, the average $300,000 home in Oklahoma City, we're still putting 20% down. It's still on a 30-year loan. Now we are going to finance it at an interest rate of 5.65%. I'm going to update my calculator, and we can see that the monthly payment at 5.65% is $1,649, and the total amount paid over the life of the loan is $498,732. So the total paid $498,732, and we said the monthly payment was $1,649. That is at an interest rate of 5.65%. And let's compare that to the 8% interest rate, again, where we were just less than a year ago. So if we were to subtract the monthly payment from 2025 at 8% for the same house down to $1,649, then we see a savings of $376 every single month. And over the life of that 30-year loan, the amount saved between an 8% loan and a 5.65% loan is $135,241. These are significant savings, both over the life of a 30-year mortgage loan, as well as what you pay every single month for your mortgage. So you can see how these lowering interest rates can make the same home more affordable. And if you're curious how this change in interest rates might affect your purchasing power, or maybe you're thinking about selling your home and you want to know what impact this has, go ahead and reach out and let's have a conversation. There is no cost or obligation for us to have a conversation. I have a 100% no pressure policy. All my contact information is down in the description below this video and pinned in the top comment. And if you're thinking about a move to Oklahoma City, but you're not sure which neighborhoods might be right for you, you don't really know a whole lot about the area, this next video is going to help uncover more about the Oklahoma City metro area so that you can make an informed decision for your next move.